Student loan forgiveness, child tax credits, and anchor property tax relief? You don't say. This is the Issues Watch podcast. Hello, and welcome to the Issues Watch podcast. My name is Nicole DeRosa, Senior Manager at WIS, and I am very excited to be your host for the tax episodes. A quick disclaimer, the views and statements expressed herein are my own and not necessarily those of the NJCPA or WIS & Company. All right, although temporarily blocked from processing discharges due to a court order, applications for student loan debt relief are now open. What does this actually mean? While the program has been at least temporarily paused, the application process has not. The court is expected to rule on the case shortly, at which the ruling can either extend the pause or allow the program to then go ahead forward. As such, those who are eligible should go ahead and apply for forgiveness. Let's talk details, shall we? Who actually is eligible? You may receive debt relief if you have eligible federal loans and meet certain income requirements, either based on 2020 or 2021 AGI limits. For single taxpayers, the income limit is $125,000, and for married taxpayers, the income limit is $250,000. What loans are actually eligible? The Department of Education will provide up to $20,000 in debt cancellation to Pell Grant recipients with loans that are held by the Department of Education, and up to $10,000 in debt cancellation to non-Pell Grant recipients. If the borrower has multiple loans, relief will be applied to loans in a specific order. If the borrower has multiple loans of the same type, relief will be applied to the loans in which the statutory interest is highest first. What is a tax treatment? Well, ARPA extended the student loan debt exclusion to exclude from gross income certain discharges of debt student loans after December 31st, 2020 and before January 1st, 2026. As such, if a student loan debt is discharged, it will not result in discharge of indebtedness to income to the borrower. Yes, this means that it is in fact tax-free, and New Jersey follows the Fed on this one. So it's a win-win situation for all. How about those who paid down their loans during the pause? Well, eligible borrowers who opted to continue to make payments and take advantage of that 0% interest rate should automatically receive a refund, assuming the loan was not paid off completely. Eligible borrowers who actually did pay off their entire loan will not receive an automatic refund and will have to then go and request a refund from their loan servicer. All right, let's move along now to the New Jersey refundable child tax credit. So starting with tax year 2022, eligible New Jersey residents can claim a refundable child tax credit on their New Jersey resident income tax return up to $500 for each dependent age 5 or younger. The credit reduces any tax owed and can also result in an increased refund. Yes, it is refundable. In order to qualify, you must be a New Jersey resident for either all or part of tax year 2022. You must have a valid Social Security number or individual tax identification number. You must be allowed to claim the child as a deduction for the tax year for your federal income tax purposes. The child must be age 5 or younger by the end of the tax year. You must have taxable income of $80,000 or less, and you cannot have a filing status of married filing separately. So you must either file as single, married filing joint, head of household, or qualifying widower or surviving civil union partner. For full year residents, the credit does depend on your taxable income for the year. If your taxable income is $30,000 or less, the credit per child is $500. If taxable income is between $30,000 and $40,000, the credit per child is $400. Taxable income between $40,000 and $50,000, credit is $300, so on and so forth. Obviously, you make too much money, you don't get the credit. To claim the credit, you must complete and file Form NJ 1040, even if your gross income is below the filing requirement. There is no special supporting documentation that is required to be filed with the tax return in order to actually claim the credit. So moving on to last but certainly not least, the Affordable New Jersey Communities for Homeowners and Renters program, which has been dubbed Anchor, thank goodness. Otherwise, it's a mouthful to say every single time. So we'll just stick to Anchor, make it easy. The New Jersey program provides tax relief to New Jersey residents who owned or rented their principal residence on October 1st, 2019, and met certain income limitations. Homeowners with income of $150,000 or less will receive $1,500. Homeowners with income of more than $150,000 and up to $250,000 will receive $1,000. Renters with income of $150,000 or less will receive $450,000, sorry, getting ahead of myself, will receive $450, period. The deadline to apply for your refund is December 30th, 2022, and there is no age limit for applicants, just the income limit. The application process can be a bit tricky. However, those who previously participated in the Homestead Benefit Program will see many similarities. This program is also not to be confused with the Senior Freeze program. It is completely separate. Homeowners need an anchor and a PIN to apply online or by phone, but good luck getting through on those phone lines. It's near impossible. If a mailer or email with an ID and PIN was not received, but a homestead benefit application was previously filed, you can access the online ID and PIN inquiry system to retrieve your ID and PIN. Certain homeowners, unfortunately, will not be able to file online and must file a paper application. Certain homeowners who are required to file a paper application are those who maybe owned or shared a residence with somebody who was not their spouse, and ownership percentages is not pre-printed in the worksheet that was received. Maybe the home was a unit in a multi-unit property that was owned. Maybe an anchor informational mailer was received for the correct property, but the name on the actual mailer is not correct. Or maybe the taxpayer is a widow or widower, and the deed is listed in both the name of the taxpayer and their deceased spouse. And there's so many other more limitations on who is actually precluded from filing online. All eligible tenants can and should apply online. For tenants, it is very easy. There is no ID or PIN required. All payments will be issued as checks or directly deposited beginning in late spring 2023, but no later than May 2023, and they will not be issued in the order that they were received. The New Jersey Division of Taxation has a very nice FAQ section written in plain English for reference. Thank you all so much for watching and listening today. If you'd like a more in-depth learning about the impact of student loan forgiveness on individuals and employers, a 2-hour CPE webinar is being offered on numerous dates this fall. You can get details as well as additional guidance on student loan debt forgiveness at njcpa.org/student loan debt. And NJCPA members who are carrying student loan debt, be sure to enter into the student debt lottery during the month of November for a chance to receive $1,200 towards your debt. This is free money, folks. If you don't enter, shame on you. Visit njcpa.org/student loan debt lottery for more information. For more information on the changes to the New Jersey's child tax credit, visit njcpa.org/hub/state tax. For more information about the Anchor Property Tax Relief Program, visit nj.gov/treasury/taxation/anchor. And lastly, I recommend that you join the NJCPA Federal Taxation and/or State Taxation Interest Groups by going to njcpa.org/groups. We will be back with a new tax episode soon. You can access all Issues Watch podcast episodes at njcpa.org/podcast. Take care, everyone.